on your screens, IDFC Bank has approved the merger with Capital First. The three entities of Capital First that will be merged with IDFC Bank: Capital First Home Finance, as well as Capital First Securities. Merger ratio, well, it is 139 shares for every 10 shares of Capital First. So 139 shares of IDFC Bank to be issued for every 10 shares held in Capital First. There will be no other consideration that will be payable to the other two companies, that's Capital First Home Finance and Capital First Securities. So what we understand, this transaction is going to happen completely via a share swap. In fact, I think Poonam Sahni is joining us now okay, not yet. We'll just get in touch with her as well. Do remember, just to run you through what exactly this means for both of these entities. The loan book for Capital First is at 22,000 crore rupees, IDFC Bank at 48,000 crore rupees. So essentially, it's a merger of these two entities. The market cap, interestingly, for IDFC Bank is at 23,000 crore and for Capital First at 8,200 crore rupees. Now, do remember, this is coming in close on the heels of IDFC Bank calling off that merger with Shri Ram and its entities, that five-way merger that was expected to happen. But that merger fell through due to the fact that there were concerns in relation to valuations. IDFC Bank, of course, seems to have moved on to Capital First, and it's now essentially absorbing these three entities that belong to Capital First: Capital First Home Finance, as well as Capital First Securities. Merger ratio 139:10. It's completely via share swap that this transaction will be carried out. Essentially, the exchange reads as such. The share exchange ratio for IDFC Bank with Capital First shall be 139 fully paid up equity shares of IDFC Bank for every 10 shares of Capital First. That's the share ratio that has been decided at this point of time. With the assets that both of these companies own, it's going to be a huge entity. You know, you're talking about almost more than 60,000 crore rupees coming under one umbrella, or more, in fact, 70,000 crore rupees coming under one umbrella, because the loan assets, like I said, of Capital First are about $3.5 billion or 22,974 crore rupees, and that of IDFC Bank are at 48,830 crore rupees. That's, of course, for IDFC Bank. It's going to create a huge entity. At this point of time, when it comes to asset quality, when it comes to ROEs, IDFC Bank does not enjoy as high ROEs and asset qualities. Capital First, for that matter, has a better equation. In fact, the ROE is at 13% for Capital First, and the gross NPAs as well are lower for Capital First at just about 1.6% versus IDFC Bank's 3.9%. Okay, we have with us Lalitabh Srivastav then from Sharekhan. Lalitabh, your initial thoughts on this merger? What do you make of this merger, and of course even the 139:10 swap ratio?
First of all, I think a lot of positives comes for IDFC Bank because as it is, the bank was kind of...
You can wait or call again later. आपने जिस व्यक्ति
on a better line,
Hello.
but yes, Lalitabh, go ahead.
Yeah, so I think a lot of value comes for IDFC Bank. As it is, you know, the net interest margins, as well as, you know, the valuations for Capital First were better than IDFC Bank. And IDFC Bank also gets an access to a large customer profile, which is, in my view, a better profile than the microfinance portfolio or others that they have been looking in the past.